I'm Alex Steele here with Jim Cramer on Wall Street Confidential, which remember you can get commercial free first on Real Money TV. Jim, thank you so much for being here.
Absolutely.
Good. Nationalization of Citigroup and Bank of America, that's all the buzz today.
It is amazing. When I'm sitting at my turret, whether it be on Mad Money or sitting here doing my Real Money articles at TheStreet.com, periodically I'm hit with a wave. There'll be something that just occurs and people will be asking me. This has been a morning where people are saying, are they going to be nationalized today? People see the action. They don't know whether it's really SKF pressure. I've detailed that repeatedly, as has my friend Eric Oberg. I would check the archives for what the SKF can do. That's the Pro Bear Ultra. But I come back to the idea that what's happening is the vacuum of Geithner. The vacuum. Geithner's not talking. Geithner made that horrible appearance. All the people who back Geithner are now fleeing from Geithner. And there is a belief that these are going to be zombie banks. Now, we had zombie banks in Japan. They obviously didn't go to this level. I don't think that nationalization is a good idea. I think that giving them forbearance is a good idea, meaning we don't look the other way. We give them some money to be able to work this way through in return for a note that when things get better, they will pay back. Seizing Bank of America and Citigroup right now, I think, would be cataclysmic to the market. And I would think the Dow 6000, I've detailed on many occasions here what the components would have to trade to get the Dow 6000. And I always come back to the same thing, which is that the Dow will be fundamentally remade without Citi and without Bank of America. Probably with Visa, which is a $40 billion company with no credit risk, and probably with Goldman or Morgan, which will be surviving institutions. So I wouldn't put too much emphasis on what it would do to the Dow, because they'll remake the Dow. It could be quick drop and then remake. But the focus for me is Geithner. And his vacuum, his absence, is what I really think is causing these stocks to go down.
So how do I use that to invest? Is there a good way to get some bond fishing stocks?
I have a piece this morning on Real Money talking about the binary nature, which is that we are all, and there's so many great technicians on the site, whether it be Dan Fitzpatrick, Rick Ben Sr., or Helene Meisler. But it's very clear that there's a dichotomy here, which is that if we don't hold X, we go down big. If we do hold X, we go up big. I think that's nonsense. It has not served any purpose. What I'm saying is that there are plenty of stocks of companies that are doing quite well. There's other opportunities to pick. We picked this morning on ActionAlertsPlus.com on Hewlett-Packard. Why bother? Because you need some tech exposure. We're trying to build Union Pacific and CAT. They're very small positions. These are potentials for if you think that things will ever get better, you need a Hewlett, you need a CAT, you need you got to have a Union Pacific. My take is find the ones you really like, recognize there could be a whoosh down on Citi, on Bank of America, and be ready on the bid side. People are going to pull their bids. They're not going to buy. You've got to be buying.
All right, thanks so much, Jim.
By the way, I should interrupt just for a second. We are oversold. One of my key indicators, we're finally there. It is not right to be short here. Doesn't mean it's right to be long, but it's not right to be short.
All right, you can pick and look for those opportunities, and you can always go to realmoney.com for any help or suggestions. That's money@thestreet.com for a free trial now. Thanks for watching.